Gold and silver prices dropped over 100 points back to key support levels as US bond yields and the US dollar index continue tracing bullish breakouts. Hello everyone, this is Razan Hilal, market analyst with Forex.com, live from Dubai. Today is May 15, 2026. So as the prolonged energy market recovery risks keep building, we have higher inflation expectations on the horizon, which are keeping a bullish outlook for global bond yields and US bond yields, pressuring the overall price outlook against gold and silver prices. Now, if we look at the gold chart from a daily time frame perspective, we can see that the price action is retesting the trend line that connects consecutive lower highs since March 2026, which is a sort of a defining barrier between long-term bullish continuation and bearish continuation on the chart. We're currently testing a critical support zone here between the 4,550 and the 4,500 support, which was the previous low of May 2026. A clean breakdown below these levels are likely to extend bearish forecasts for the gold chart all the way back down towards the 4,300 to the 360 zone, and the clear breakdown below that is likely to extend bearish forecast to retest the lows of this year for either another bullish rebound opportunity or extended drawdown risks down towards the 3,800 zone, lining with the previous lows of October 2025, which is also a zone that is eyed by many analysts and traders globally for potential long-term bullish positioning on the charts once again. Now, if we look at the gold chart from a shorter time frame perspective, from the 4-hour time frame, we can see a classical technical analysis pattern, which is known as a diamond pattern, which connects both broadening consolidation and the contracting consolidation at the same time. This consolidation extended on the charts across the month of May and gave way following the clean breakout back below the 4,660 zone, which is a pattern that usually traces a steep breakdown equivalent to the steep bullish breakout that preceded that pattern. So now we're here at that critical support level, assessing either another bullish rebound, continuing the overall bullish breakout that we saw earlier in the month of May from that overall month-to-month border, or not. Should we have a clean rebound over here, possibly aligning back with the 4,660 mark, we can be expecting either another short-term pullback risk or a bullish rebound, at least testing the bounds of that diamond. Once again, passing through key levels between 4,730 and 4,780. First, a clean breakout above these levels are likely to extend bullish forecast towards the 4,830 to the highs that were seen in April 2026 near the 4,880 to the 4,900 mark, for also another long-term test for the gold prices. A clean hold above this level is likely to open the door back towards the 5,000 psychological barrier, which can realign prices back towards, or at least forecast back towards their record highs on the gold chart. Now, if you look at the silver chart, we had a rally that was pretty steep, while gold prices were still forming that diamond pattern. Gold prices were still relatively muted to the steep uptrend that we saw in silver prices. And across the history of the chart, silver sometimes tends to extend a late rally and then catch up with gold with an aligned downturn. Now, there was also that signal for diamond breakdown on the gold chart, as silver was also approaching the upper bound of a respected uptrending parallel channel, or the trend line connecting consecutive higher highs since March 2026. Once we approached this level in the 90 psychological mark, we saw that steep sell-off over here, passing through the mid-zone of this channel, which was near the 280 mark to the 83 zone, and now we're aligned with the bottom bound of the zone once again, lining with the 77 support. Should we have a clean breakdown below the 77 support, we can be expecting the next drawdown for silver prices to test this support area over here. So that would be between the 70 zone and the 50 to the 70 psychological mark for either another bullish rebound or confirming the bearish continuation that you've been seeing in dominance across the silver chart. This is the highs of this year, with the first key support in sight near the 63.70 zone and the next support level in sight near the 56 level for potential long-term buying opportunities. If not, we can be expecting prices to fall back towards the 50 to the 48 zone, lining with an over 45-year trend line spanning from the highs of the 1980s for a higher probability setup for long-term bullish positioning on the silver chart. Once again, from the upside, should we have a clean hold back above the mid zone of this channel, so back above 83 to the 84 zone, we can be expecting another retest to the upper bound of this channel. That would be also back near the 91 to the 92 zone. A clean hold above this level is likely to retest prices near the highs of March 2026, so that is near the 99 to the $100 threshold before opening the way in a similar manner to gold back towards fresh record highs on the silver chart.